Welcome to RealCast, the weekly round of the real asset markets. My name's Richard Betts and I'm joined by Dan Innes, Giles Barry and Nicole Dines. Let's start with you, Nicole. What have you been watching this week?
Real Asset Media had a briefing, a focus on Germany. Interesting, sort of poised market, because last year it did rather well despite everything. Transactions were 65.4 billion, down 19.4%, while it's had a very sluggish start to the year. And for the first 2 months, January and February, it was 5.5 billion, a 56.6% decline. But the expectation of all the panelists was that there would be a strong bounce back as soon as things improve, and it's very much linked to the vaccine rollout. It's been very slow, much slower than expected in Germany. So obviously foreign investors are still very much absent from the market because they can't come in. But they emphasize that now is really the time to find opportunities, because in 6 months it will be too late. Another interesting thing about the German market is that residential was by far the strongest sector, followed by offices. And there's an optimism that both sectors will do really well this year as well. So quite a different picture from what we've seen elsewhere. Another briefing that Real Asset Media did this week was on ESG, 4 different panels looking very much in depth at a sector that has now become a must-have. It's no longer just a nice thing to have, but it's an absolute must. The emphasis was on the fact that ESG, there's been an emphasis until now on the E, especially on CO2 emission, reducing emissions. But it's time to look at it more holistically and take into account the social and governance aspect as well. And obviously regulation is only going to get tougher. And they also emphasize that the EU is very much ahead, and other countries around the world will probably follow the EU model. And obviously companies have to be proactive. Interestingly, there's a consensus that valuations, ESG will obviously have an impact on valuations, but it's very difficult to quantify at the moment. Also, another interesting thing is that the role of the valuer is changing, and it's becoming more of a consulting role, so that the valuer will give advice rather than give a figure. So things are definitely changing in the ESG world, but it's a sector that will become more and more important.
Yeah, it was interesting, Nicole. I think also the focus there on the tax part, where there's an active discussion at the moment around tax related to sustainability, which of course is part of the ESG requirement for companies, versus the traditional role of trying to minimize tax. So and that's an interesting one that I think we'll hear more about over the year. Giles, what have you been tracking?
Well, still on the subject of sustainability, Richard, there's a really interesting announcement by Capital and Regional earlier in the week, which, like all shopping centre owners, has had a hard time. But their shares are up more than 10% after their announcement of a tie-up with an American group called Reef Technology, which specialises in alternative uses for shopping centres and their car parks. So it's everything from neighbourhood kitchens, urban farms, last mile logistics, smart transit, which is things like e-scooters. And they install these in centres. They're in 4,500 locations around America. And Reef has just had a $700 million fundraise. I think it's really interesting. It's a glimpse to the future. Everyone in retail has been looking for answers. And what shopping centres have got is location. And if it's not a good location for lots and lots and lots of shopping, perhaps they're good locations for some shopping, particularly those with community needs, and these alternative uses. And as I said, it's sustainable as well, because it's not flattening a centre that you might have no good reason to knock down. So I thought that was really, really interesting. The next thing is the government's extension to the moratorium on companies taking action over unpaid rent. Mike Phillips, a former colleague of mine now, who's the UK editor of Biz Now, wrote a brilliant tweet the other day, kind of saying, look, this will have gone on for more than a year soon. And how do we wean ourselves off the kind of crack of companies, retailers, occupiers not paying rent? Lots of them have got no good reason not to pay rent or reduce their rent because they're open. But sooner or later, we're going to have to face up to this. It's a real ticking time bomb. And Mike likens this to quantitative easing and getting off that after the global financial crisis. It's not quite the scale of that, but it's certainly a really, really, really huge issue for real estate.
That discussion also has been very active across Europe, I think. I absolutely agree, Giles. I think it's very, it's going to be a key point around that rental side. Dan, what have you been watching?
This week, it's been a bit of a week of finally planning some real estate events. That's in real life events as opposed to digital, something we've not been able to say for quite some time. We've all become a bit too familiar with Zoom, haven't we? But so in date order, Reed Meadem, the organisers of MIPIM, they announced on Thursday that the edition that they had planned for June, that was in everybody's diaries, but everybody suspected wouldn't go ahead, that has indeed been pushed. Instead, there'll be a face-to-face Reconnect MIPIM program in September. On the 7th and 8th, to be precise. That's a Tuesday, Wednesday, and so we could all be back in Cannes as soon as September, which is fantastic. But MIPIM's director Ronan Vaspart, he said, it's vital that the real estate community continues to have a global platform and give it a voice, through digital events and real life events, but to sort of fast track our business environment's recovery after these restrictions have eased. And then towards the end of September, there's also the news in the UK that Completely Marketplace and the industry membership body Revo, they're to collaborate for the first time to deliver a one-day event on Tuesday, the 28th of September. Now, normally those two events, anyone working within retail property knew that those two events were sort of always seemed to happen in consecutive weeks, which made budgeting decisions quite hard. But this year, I think we can all agree, was pretty exceptional. So they've put their two events together. And that's going to be a busy week because, of course, that's the same week as London Real Estate Forum up at the Barbican on the 29th and 30th. So, get those dates into the diary, because lockdown, when that lockdown eases, I think there'll be a veritable stampede for tickets for these kind of things, I think. But elsewhere, it was a bundle of good and bad news for different large store and department store operators. We saw the John Lewis department store group. They published their results, and of course mentioning that it was quite likely that several of their stores simply would not reopen. Elsewhere, Selfridges actually signed 8,000 square feet of space to Hugo Boss, to its newly refurbished parcel building right alongside the main building, in a bit of a coup for Oxford Street after a busy time for them. But the remainder of that parcel building actually has 20,000 square feet of retail space. That includes the Hugo Boss space. And there's going to be some co-working space provided by a group called Fora. Also on Oxford Street, M&S proposed the redevelopment of their huge Marble Arch store that everyone remembers. It's their iconic flagship store, their largest one. It's 160,000 square feet over 5 floors. But under the new proposals, which we saw in an article by Joe Burke in the Evening Standard, there would be up to 9 floors, but only 2 of those would be used by M&S, and the rest could give you a bit of an indication as to the opportunity for office space. And then last of all, the big retail plays of this week is that Next have bought a 25% stake in the fashion chain Reef at a price tag of around 200 million. Reef is majority owned by US private equity, Warburg Pincus. But that acquisition from Next comes after they dropped out of the bidding on the Topshop Topman elements from Sir Philip Green and Arcadia, and they were, of course, those assets were sort of snapped up by Assos, who ditched the stores, of course, whilst other people like Boohoo acquired Debenham's website as well. So quite a lot of activity there, Richard.
Yeah, it's interesting to see that kind of changing face in terms of both the brands, but also the real estate side that you mentioned, Giles, as well. Just looking at some of the alternatives, I noticed as well that BNP, due to investor demand for their open-ended healthcare property fund, launched only in the last quarter of 2020, is likely to increase its target size, according to fund manager BNP Paribas Reem. So just interesting to see how a number of these themes are really beginning to come through. Thanks very much, Dan. Thank you, Giles. Thank you, Nicole. Thank you for joining us, and look forward to seeing you next week for our regular roundup of the real asset markets.